welcome to Next Gen Finance, an SEB podcast about sustainable finance. My name is Lina Apsheva, and today I am joined by Gregor Vulturius, who is a lead scientist in climate and sustainable finance at SEB, and Samantha Arpas, who is a sustainable finance specialist at SEB. We will talk about the recent changes in SEB's sustainable finance research and the emergence of a new flagship, or rather an upgraded flagship report called Sustainable Finance Outlook. We will talk about the latest issue, the upcoming issue, and generally the trends within sustainable finance. So, Gregor, Samantha, thank you so much for joining us on this episode. Samantha here in the studio and Gregor joining us online from Denmark. So let's just dive right in. So I'm sure that not everyone might understand what sustainable finance research means and why research is necessary in the context of sustainable banking. And I was wondering, Gregor, if you could maybe give us a bit of insight into what exactly do we mean when we say sustainable finance research, and what are you guys focusing on in your work?
Sure. I think to make a very brief definition of sustainable finance, it's the use of capital to further sustainability development in conjunction with some commercial gains. So historically, this field really emerged and really came to fruition with the green bonds market, started developing in 28. And since then, much of the research has focused on to what type of proceeds are used to what type of sustainability use cases. So that could have been renewable energy, energy efficiency, water infrastructure. Later, you saw more research focusing on sustainable linked bonds and loans, where, of course, the performance of a financial instrument, be it a bond or loan, was dependent on the borrower's sustainability performance. And in later years, now we are looking into even more sophisticated forms of finance. That could, of course, be green equities, and it could also be the interlinkages between sustainable finance and other types of, socioeconomic objectives, including security. Even for the back end history, you find something called impact investing, where investors actually forego some or all of the commercial gains of their investments to the benefit of pure sustainability impact. That's a very old field. You can even say that donations were part of that type of sustainable finance. And another area of sustainable finance research covers then the interest of investors. So some investors have very strong opinions on what they deem to be legitimate investments. Nowadays we talk a lot about ESG investment, so investments that take into account environmental, social, and governance factors. And that's a very old field, actually. It started all the way back in the 1970s, really, when churches started to avoid investments into what they deem to be amoral areas such as alcohol, pornography, or gambling. But that's basically sustainable finance research. It has a very long legacy, a very old legacy, reaching back at least 4 or 5 decades. But nowadays, most of sustainable finance research covers sustainable finance instruments such as green bonds or sustainable linked loans.
And then the publication, or SEB's flagship research in sustainable finance, that is called the Sustainable Finance Outlook, is the main kind of report that you produce, and that is available on sebgroup.com for anyone to see. So what have you guys been focusing on in the work with Sustainable Finance Outlook in the past couple of months, or in the first half of 2025?
I can say that we kind of went through a little bit of a refurbish and rebrand before the summer, especially for our June released report. I think the biggest thing was that the report, maybe if you had seen this somewhere online on sebgroup.com, it used to be called the Green Bond Report. And that was something that was established in 2018, very much when green bonds were still making their way to be stabilized in a common product on the market. whereas now today it is. And so we have found that the name didn't reflect as much, so we decided to change it to the Sustainable Finance Outlook, also to kind of show that our readership has grown and it's demanding more information on sustainable finance, which is today more than green bonds. So I think that is something that was a very big focus for us and quite successful. We have also improved how we've distributed the report. Now you can find a highlights page when we release, and that essentially gives you access to the recording of our webinar, which we've never shared previously. So I think that's something that's great to actually get to hear those that contribute to our report actually present it and answer the questions that the audience who attends the webinar might have. So I think that's great. And then you also have access to be able to look at all the articles individually, which I think gives great accessibility to our readers going forward. So that was a big focus in terms of how the report has kind of been refurbished and become a lot more accessible for our readers based on how it's grown over the past few years. In terms of topics as well, we had a really big report in June on the topic of sustainability and security. And that came, very timely with all the geopolitical tensions in the world, and is something that we can discuss further, Lina, if you'd like.
Absolutely. And first, I'd like to congratulate you both on a very successful upgrade of the report. And I'm sure that people searching for the report on our website will also be grateful that now it doesn't have to be confused with a green bond investor report where SEB reports on its activities within the green bond framework. Yeah, there was a bit of confusion between the two before. So now it is Sustainable Finance Outlook. And I personally do really appreciate the recordings of the webinars that you mentioned, Samantha. You always have really exciting speakers there, and the next time the next issue of the report will be published is the 24th of September, right?
Exactly.
So I'm very much looking forward to that. It's always an exciting day, but like you mentioned, the previous issue came out a little bit earlier this summer in June, and would definitely love to hear a little bit more about what the main theme of that publication was.
Yeah, absolutely. I mean, in June, our report focused on the topic of sustainability and security. And as I mentioned, this was a time, and still is, a time with very heightened geopolitical tensions. We have war in all corners of the world, and, the threat of the U.S. leaving NATO was a big topic. And I think this is also a time where the definition of security as we know it has changed over time. And that is something that we have to adapt to. Essentially, how we've understood security to be before was this concept that served as a way to defend ourselves from historical threats, things like interstate conflicts, nuclear war, terrorism, economic instability, you name it. And while these threats are still very much present in our day-to-day lives today, we have a new layer of what we consider to be these modern day threats, which are things that we've never really dealt with to this degree before. And those are things like, climate change is a very obvious big one. We have hybrid warfare, cyber attacks, pandemics, resource scarcity. And so in the 21st century, essentially, when we are talking about security, it's going far beyond, defense. And so it's about now building resilience against these modern day threats, which now invites sustainability to be a way to risk-proof ourselves going forward.
This is actually a topic that I've been thinking about a lot, just the definition of sustainability and how much it has changed in the past 5-10 years, and how much broader it is becoming, or maybe the question is, how much broader should it be even?
Exactly.
Because if you think about it, everything can be tied to sustainability. I actually recently listened to a podcast episode, the Sustainable Views podcast, about food systems and how food systems relate to security in a way. So definitely a lot of very interesting connections there. Could you give maybe paint a few more details about the actual content of that publication, who contributed and what type of questions were raised?
So in that report, we had the pleasure of welcoming the Stockholm International Peace Research Institute, who spoke on cyber security, essentially, and talking about the modern day threats related to that. Especially as we're transitioning in the context, let's say, of renewable energy. I mean, these systems become very complex. There's a lot of new technologies. There's a lot of digitalization. And so with that, we're also increasing ourselves to potential external threats. And so they kind of warned on what exactly needs to be done when it comes to cyber threats. And a big concept that came out of there was digital sovereignty, which means just having national control over these digital systems to be able to safeguard ourselves going forward. I think, Gregor, you had some really great insights on this topic as well.
Yes, I think this is something that is a very sensitive issue, and I think we actually now do see it reflected in the ongoing trade discussions with the US, with the US threatening Europe over the EU's own digital regulation. That part of their purpose is to strengthen not just consumer rights and privacy rights, but also Europe's own digital sovereignty, and this is a very contentious matter. So yes, that is an issue that I think has been a little bit under the radar, and there's been a lot of trust being placed in, I think, the unbiased nature of some of these digital service providers, and with changes in regulation and changes in, I guess, political mood, people waking up to the fact that also digital infrastructure is critical infrastructure that needs to be safeguarded. Another really interesting contribution to the report came from Lithuania's grid provider or grid operator, Epso-G, which they're really at the, I guess, the forefront of energy security and renewable energy transition in Europe. So the Baltics themselves they're an energy island. They're very independent. They're very dependent on energy imports. Historically, of course, that came from Russia, and now all these countries are now striving to cut their dependence on Russia, but also to increase the share of renewables because for them this makes the most sense, right? To have domestically produced energy, and that comes from renewables. So Epso-G, this company that we have in the report, they have just recently cut their ties to Russia. The remaining gas and electricity links that were there have now been cut. And they are now developing their own drone program to essentially guard their infrastructure against potential threats, particularly hybrid threats, of course, from the east. It's a really fascinating story, and it really shows you how renewables can play their important part in furthering Europe's energy independence and security.
Definitely very, very, very hot topic right now. I think that I can't think of any events or publications that I've seen in the past, half year focusing on sustainability that haven't mentioned to some extent this security, especially in the European context. But if we look at the bigger picture in terms of trends, the security and the resilience, from the sustainability point of view, are definitely a very clear trend that has been going strong in the past month. But are there any other well-defined, so to say, trends that you have been seeing in the world of sustainable finance recently?
Yeah, absolutely. I think there's, of course, when we talk about hot topics, security is one, and then the other one right beside it is artificial intelligence, with the rise of data centers being built, different GPTs out there. It's becoming a super big topic. And I think there's two ways to look at it, right? There's the sustainability aspect of how we're going to deal with this energy intensity or, thermal pollution from cooling data centers. But also, how will AI help us really bring sustainability strategies or investment ideas into practice through, the use of what's out there? I think there's a lot to talk about within artificial intelligence, and that's been very much at the forefront as well, especially when we're talking about like autonomous systems as well. That's been huge in what's being talked about.
If I can add to this, another trend that we're seeing is the realization that the transition won't be as easy as at least some of us thought. And that manifests in two realizations. So the one that we already touched on in the last report is that natural gas will probably play an important role for longer than we had initially hoped for, from a climate perspective at least. In our last report, we also had the Copenhagen infrastructure partners writing about their vision, how renewables can improve energy security in Europe, and also they admitted that natural gas will have to be there, not so much to stay over the long term, but to enable the switch off of coal power plants earlier to provide this system energy system with a level of stability that renewables will eventually be able to play together with batteries, but are just not there yet. So that's something that's been, I think everybody in the industry now is grappling with the question of natural gas. And in Europe, of course, because of the fact that we don't really have domestic resources, as maybe from in the North Sea, but that's very limited. This is a question of that is even more important. How do we deal with natural gas? What is actually its role? It's a bit of a painful debate, I think, but it's necessary to have it. You see that reflected in countries like Germany, where the new government is now actively proposing to build new gas peakers. And for many in our industry, the knee-jerk reaction, I think, is to say that's bad. But I think it's worth looking at a very niche use case of natural gas, again, to enable the onstreaming of more renewables faster and the switch off of coal power earlier. I think that's an interesting role to play. The other issue that we are going to cover in the forthcoming report, which will be published on the 24th of September, will deal with the issue of decarbonization costs and what are really the marginal abatement costs per industry. How much does it actually cost to build a green steel plant or a green cement plant or a green aluminum plant? The producers of these commodities may or may not know how much that will actually cost, but the value chain partners, the truck producers, the real estate developers, they have very little visibility on this. And that's something that we are spending a lot of resources and time on right now to figuring out. And we hope to present some of our insights in the upcoming report.
And Gregor, you as an expert in the sustainable finance market and kind of looking at the developments in the market, how would you say are these trends affecting the development of the instruments that we all know and love, such as the green bonds, sustainability-linked bonds, loans, and other related instruments?
Yeah, because of the fact that the transition is more difficult than we thought, that has immediate implications for linked products, right? Sustainable linked loans or bonds. Because of course there the borrower's sustainability performance is a decisive factor. And if companies are not able to, switch to renewables as fast as they thought because it's too expensive, or the grid infrastructure isn't being built by policymakers or other regulatory barriers, then that, of course, has an adverse impact on their sustainability linked borrowing. And that's, of course, also reflecting the fact that these products have seen a quite remarkable decline, right, from a couple of years ago. So that's one, I think, one change, one impact. And the other one is that, of course, green bonds maintain to be a very attractive tool because it gives both borrowers and investors 100% transparency of what their money is actually being used for, right? And it's much easier to report and communicate that to your shareholders and stakeholders. I think those are the two things. Another area that we are now going to cover more of, and I'm going to pass over to Sam because she's really a specialist in this, is we have focused very much on the kind of the large market or the private capital market, the one that you can actually have a visibility on in the bond market. More interesting things arguably happen in this kind of private credit venture capital area where new technologies are being pushed They have to go through this valley of death, where use cases aren't really clear, technologies are not really ready yet, but the potential is enormous. And when they make that way through this, then you can see really significant changes in, let's say, electrified heating, or other types of decarbonization methodologies that we need, but they are a little bit too small, a little bit too novel to attract the kind of conventional sustainable finance instruments like bonds.
Sam, I know you spent some time with the SEB Green Tech Venture Capital team earlier this year. So, yes, please fill us in. Very interesting.
Yeah, so happy to tap into the VC markets and give you some insight there. I mean, I've been looking a little bit into VC deals that have been occurring within hard to abate industries like cement, steel, chemicals, and oil and gas, and kind of understanding, where are the companies in terms of stage when it comes to funding, what countries are producing the highest volume of funding in terms of deals, and, what's coming up next. And, proud to say that Sweden is definitely a leader when it comes to funding in those hard to abate, I guess, industries, right after the US in terms of, monetary value and investment. And we're also seeing that, a lot of the companies are still in the early stages, I would say. Most of the investment, I think, is very common in Series B. So they've had a couple of rounds already, but they're on their way to maturity. I think of the sectors that I've looked at that had the most mature technologies, chemicals was definitely a leader in that. And I think that will be very interesting to see how those developments go forward. They had a lot of Series D funding that we're able to see. So that means that, maybe we'll be able to see some of these technologies included in a use of proceeds for a green bond going forward. So there's a lot going on, and there's a lot of money flowing and a lot of interesting ideas. And I think we just have to keep an eye on it because it's all interconnected and will develop to be in these public markets going forward.
And could you please clarify the difference between the different series investments?
Yeah, so I mean, essentially, you have like a seed stage, which is the company is, it's just started off. They haven't really had a proof of concept yet. They have an idea and they have an investor to back it. Series A, they have it's a more mature type of deal that you're going through, and they've had some rounds of funding. Maybe they're on their way to seeing some sort of revenues coming forward. And then when we're talking Series B, it's a little bit more advanced than that. Maybe they're on their next level of funding, and they're really just trying to get their way to having some positive cash flow. Whereas Series D, they're quite matured, and Series D, you would probably see some sort of IPO happen within the next year or so for a company. So very much matured and ready to go public.
So I'm assuming that we can expect to learn more about these type of companies in the future publications.
Absolutely. You have to keep an eye out on our market update.
Yes. So thank you so much for giving us some insights into the upcoming issue of the Sustainable Finance Outlook. As a reminder, one more time, it's coming on September 24th, and then the recording of the adjacent webinar will also be available on our website, and we will include the link to that in the show notes to this episode. But if we look in a little bit more general terms, we usually at the end of the year we do a forecast episode for the upcoming year and kind of what are we expecting from the year to come. So maybe we'll leave the very long-term view to that, but for the coming 6 months, do you have any predictions or expectations on perhaps other topics that might emerge in this area?
I think a really hot topic, and I think it's always been a hot topic, it's just developed further over the past few months, is within physical risk. I think that's always been something that's been on people's minds. It's just we've had lack of data, and now the data has really become quite matured. And so you're able to see your risk in terms of, various factors, be it floods, severe like freeze events, landslides, you name it. And I think that coming forward has developed because you can also put a price on damage value. And I think that will become incredibly interesting going forward as people are starting to, create models and really understand the value of damage that is at stake in the forward as we progress into a future with more severe, frequent weather events. So I think that will definitely be something on the rise.
Yeah, very interesting, especially in the context of adaptation and this constantly present question within sustainable finance of who should pay for what. Gregor, did you have anything to add? Any predictions or forecasts?
We are, of course, hopefully celebrating the 10th anniversary of the Paris Agreement this year. Probably something that people are forgetting about already. And of course, given the new administration in the US, it's a bit of a tainted picture there. People asking the questions, what is really the future of multilateralism and this particular agreement? How impactful has it been? It's the Paris Agreement, as of course, has been a child of its time back in the days when China and US were much closer, and voluntary action was regarded as the way to go to kind of create a collective sense of urgency and agency. And now we live in a much more uncertain, antagonistic world where you have tit for tat diplomacy ongoing, where it's really about paying for services. I think you will see much more of a spillover from the trade negotiations or the negotiations about Russia's war against Ukraine spilling over into the climate field, where companies are saying, yes, okay, we are going to do this, but only if you do me this favor, pay this. We will see how well it plays out in Belen, where this year's COP is going to take place. I personally foresee maybe an opportunity to reel in the US again into the Paris Agreement if someone is paying for it, essentially. If that's not going to happen, this ongoing trend of a multipolar, not just political world, but also energy world will probably be strengthened. So where you have China and hopefully Europe really doubling down renewables, and the US, partly due to its domestic fossil fuel resources, staying back in the 20th or arguably the 19th century. That will probably be my guess.
Here I can make a short reference to one of our recent episodes about specifically China's investments in the renewable field with Erik Halldén, who's a SEB advisor in Asia. So if you're interested in learning more about China's strategy when it comes to investments in renewable energy, then I would definitely recommend listening to that episode. But this discussion has been a lot of food for thought. I think that we've touched on a large number of different themes, and I definitely am very curious and looking forward to the upcoming publication, but also to see where the developments in the world of sustainable finance take us from here. So thank you both so much for joining us on this episode and sharing your views. Is there anything else that you would like to mention before we wrap up this discussion?
Just if you would like to subscribe to the report, feel free to send an email to Gregor and I, and you can find that on sebgroup.com.
All right. Thank you so much, Gregor, Samantha. And as always, a big thank you to our listeners for tuning in. Don't forget to subscribe or add the podcast to your favorites. That way you will be notified when new episodes come out. But for now, take care and goodbye.